real estate sales have jumped almost 25%. Is this a real estate bull trap? Hi, my name is Adam Nadler. Thanks so much for coming back to the channel again. I sell real estate in Toronto and the Greater Toronto area. If you have any questions about real estate or you'd like to chat with me, feel free to click on the link in the description below. That'll connect you to a calendar where you can book a quick time to chat with me at a time that is most convenient for you. Or feel free to just shoot me an email with any question that you have to adam@visionrealestate.ca and I will get you a custom video response within 24 hours. We're going to jump in today with the latest stats from the Toronto Real Estate Board. But before we do, stop what you're doing, hit that subscribe button if you enjoy this content, and be sure to hit the like button so this video can be pushed out to more people like yourself. All right, so the big headline that we are seeing right now is that sales volume is just exploding. We are seeing a almost 25% year over year increase just last month in sales volume. And if we were to look month over month, it's a 5% increase month over month, which is also pretty big. And of course, along with sales volume, we have price increases because our inventory is so low. So month over month, we are seeing a massive increase, 3.2% in average price month over month. And when you look at it year over year, there's almost no change, a 1.2% year over year change in average price. And given the fact that last May, we were still pretty close to the peak of the market, which was February, March, we had definitely begun the decline in pricing. So frankly speaking, I'm a little bit surprised to see a 1-year recovery in total. It is a very quick recovery for the real estate market in Toronto. And why is this happening so starkly? Well, it's because we have no inventory. Total new listings are down 18.7% year over year, and the sales to new listings ratio is up 20% compared to last year. Now, truth be told, these numbers are not that uncommon for a seasonal trend for the spring, but we're basically in the summer at this point, and so these numbers should have started to slope down. However, we haven't had a seasonal trend in real estate since before the pandemic. So really what we're seeing is a trend that is purely based off of the interest rates. Typically, we would see markets start to really pick up at the end of March and really be going strong in April and May. However, this year, everything started a little late because the pause in interest rates only happened midway through March. So everybody was unsure about what would happen with the real estate market in March and April. And then May, things just started to really explode. And that's what we're seeing right now. So I think our spring market, or our spring market trend that we would normally see in the spring, has now moved to the summer. And I think that that trend is going to continue right on into the fall. We're just going to have a very steady incline while we're playing catch up in sales volume over the fall and winter of last year. So we're going to see things steadily increase in sales volume, activity, price, all of that kind of good stuff over the next year or so as we start to see a balanced market recovery, hopefully. And again, that's just what I think. Let me know what you think in the comments below before we continue with more good stuff. Do you think that this is going to be a sustained recovery like I'm anticipating, or is it just a bull trap? So if we start to smooth things out and we look at seasonal trends, what we will see in seasonally adjusted figures is that we are still not yet recovered. And that's what the orange line is here in this graph. They're seasonally adjusted sales. So we're just trying to smooth out those peaks and valleys. However, when you look at the blue line, which is sales, and it's not seasonally adjusted, what you'll see is the peaks and valleys based on, well, season. So we can likely just expect sales to maybe climb a little bit more to the 10 or 11,000 mark, but then start to slowly taper off as things settle down. Or we could just see that sustained growth happen like we did in 2021. All right, so I had originally shot this video before the interest rate announcement happened today, but because it has happened now, I wanted to kind of update a little bit about what's going on. So the Bank of Canada just increased the rate by 25 basis points today to 4.75 for the overnight rate. Now, we've definitely been having seasons, like I was saying in this video, based on the interest rates and not based on a traditional real estate seasonal trend. However, I do still see that even with this interest rate bump, that we are still far outstripping our supply when it comes to our consumption rate. The demand is just overwhelming. So although I think that today was a bit of a surprise for everybody, I personally wasn't expecting them to raise it today, but I don't think a lot of other people were either. So it was definitely a surprise in that sense, but I don't think that it's necessarily going to change very much. In fact, I think that this move by the Bank of Canada today is going to have a very similar effect to what it did earlier this year, which is just lower inventory. I think that less and less people are going to be inclined to put their homes on the market, and less people are going to be looking to make an upsize in a market where they're going to be taking on a higher debt load at an even higher interest rate. So what I think this is going to have the effect of doing is actually making our inventory situation even worse. This is also going to have another effect, which is landlords cranking up their rent on places that are not rent controlled. So anything built after 2018. So overall, is it my opinion that this really changes much about my thought process in this video? No, I actually don't think that this is going to change very much. I still think we're going to be on that steady incline for the rest of the year, and that next year we are definitely going to be hitting a much stronger market. But that's just what I think. What do you think? Do you think that the key interest rate decision that was made by the Bank of Canada today is going to have a major effect on our marketplace as it is? Let me know in the comments below. And now let's get back to the video where I kind of explain my thought process as to why I think this is going to happen this way. And you may be wondering, with interest rates so high, how are we seeing such a stark recovery? And I think that we need to look at two things mainly. We need to look at, number one, sales volume with the low inventory. When we have such low inventory, which is frankly radically low, even for Toronto real estate standards, this is still incredibly, incredibly low. Even if you have a little bit of pickup in sales volume, it's going to really cause a big bump in pricing because we are just so far out of supply. But then when you couple that with the second thing that we need to be looking at, which is immigration, we have a ton of new people coming into the country. We had over 1 million new immigrants brought into the country last year. That is smashing a record by almost over double what our previous record was for an entire year. Most of these people are being brought in on economic programs, meaning they have money to buy when they get here. They just need to build up some credit and then away they go. And we're starting to see the effects of that now. If you check out Supply and Demand with Adam Nadler, it's the podcast I host. I like to host a lot of people who are in the know in the mortgage industry, in the renovations industry, and all kinds of stuff like that. And what I found myself asking some mortgage brokers was, how long does it take for someone to qualify for a mortgage or get a credit score that's good enough that it could qualify them for a loan when they are a newcomer to the country? How long does that process take? And the answer I was getting was anywhere from 6 to 12 months. And we're basically hitting that 6 to 12 month mark very soon, if not already. And I think that that's really contributing to the growth that we're seeing right now. Basically, if we don't have any more listings that come to the market to meet this demand, we can expect a market price growth that is going to expand in a pretty aggressive way over the next year. And then in 2024, if they start bringing down interest rates to kind of couple that together, well, I think we all know what happens if that happens. Or should I say when that happens? So it is in my humble opinion that we buckle up. We are headed for a booming Toronto real estate market, but that's just what I think. Let me know what you think in the comments below. Thanks so much for tuning in, and I'll see you next time. If you like that video, click the subscribe button on the right, or feel free to enjoy another video here on the left.